Okay, after a big rebound from the Fed sell-off the prior week, we ended Friday down, stalling at the trend line. The possibility of a back test for the Dow and the S&P 500. The Dow ended down 334 points, rounding up, down 0.77% lower. The S&P down just over 1%, 1.11% lower, down by 67 points, rounding up, down to 59.71, back below 6,000. The NASDAQ down about 1.5%, the Russell down just over 1.5%, and the VIX was up 8.28% to close just under 16. Now, here we have the risk model for Bitcoin. We had started to try to turn back to a risk-on environment on Thursday, turned right back up, moving back and reaffirming the risk-off scenario there on Friday with the sell-off. Same thing here. Tried to turn with the rebound. We back-tested this trend line, the broken trend line. The risk line tried to turn back to bullish. We saw risk-off price move from risk off to risk on, tried to flip it back to a risk on, and then flipped right back to risk off. And the same thing here with the S&P trend. It tried to flip bullish, flipped right back to bearish with the sell-off. So again, the risk is that we get a bigger sell-off, go back, fill the gap, or hit major horizontal support. At the moment, things have flipped back to bearish, moving back and reaffirming the risk-off signal. The risk line turning back to bearish after trying to turn bullish, and the S&P trend back to bearish. This is telling us we're either going sideways or down now with these. Now, again, can the S&P still reach the upper channel line? And if it does, do we see the RSI turn back up, the MACD possibly turn back up as the MACD did back over here? I've talked about this peak over here, how it turned down and it turned back up a couple of times. I think you could still see something like that happen. We've seen it on and through here as we've had this advance. So we'll be watching that. Now, we buy a little bit more time. We attempt a recovery on the Dow and on the Russell. Maybe helps the S&P push to new highs, or do we have to get a bigger sell-off before the Dow and the Russell attempt a recovery? Right now, they're trying to bounce off their 100-period moving averages. After turning off of their upper channel lines, the Dow already reached it and overthrew the monthly trend line to reach this trend line. I think the S&P will do the same thing. The risk is that we have a December top in for the Dow or even for the S&P. My guess is the S&P will eventually do what the Dow did and reach the upper channel line here in the weekly time frame and sharply overthrow the upper boundary in the monthly time frame. But can we see a recovery with the Dow and the Russell? In these divergences play out, here's the Russell, again, trying to get traction off that 100 period. If it goes lower, you have the 200 and the trend line, the lower boundary channel line right here. We've seen nearly an 11% drop on the Russell. We saw a 6.6% sell-off on the Dow. We'll be watching, see if we attempt a recovery with both, or do we have to go lower before we get an attempted rebound. The RSIs are holding above 50 on the weekly charts for the Dow and the Russell, but again, both of them turned off of the upper channel line. We're getting a candle of indecision here at the 20-week moving average. Again, it could be the S&P still goes to a new high and the Russell ends up forming a divergence with it, or we could go down to this lower channel line and bounce there. But again, we took out that 20-week over here. We came back up to the 20-week, and we ended up diverging with the S&P. So if we still go lower, we still may see the S&P attempt new highs, while the Russell very well could have peaked and end up diverging with the S&P 500. But interesting, the S&P has not reached the upper channel. Neither has Bitcoin. Go watch my Bitcoin video, and you'll see that. But yet we've seen the upper channel line reached with the Russell, the Dow, and the jury is still out, I guess, on the NASDAQ because it came to shy of that level of that trend line. Did see the NASDAQ composite reach it, and again, that is including the lows over here, perfectly parallel channel, a little bit nicer channel than on the NASDAQ 100. But again, NVIDIA can rally. It could help the tech sector. We'll be watching. It could help the NASDAQ. We'll be watching that now going into January. Now, so far, that has taken the S&P 500, the December 6th peak, right here has taken the S&P down almost 4.5%. As we go into January, I'm watching this low very carefully, talking about the momentum signals, which are really mixed. The momentum turn back to bullish and get above this trend line if we're going to resume the advance, as we're at risk of a bigger sell-off. So far, we have lost almost 4.5% S&P 500. Dow has lost 6.6%. The Russell has lost even more. NASDAQ has lost about 5.5%. Now, while the S&P has lost nearly 4.5% since the December 6th peak, we have not seen it confirmed yet, with volatility sharply rising above the signal line and eventually breaking the downtrend, nor have we seen the S&P trend direction validate the December high as a top yet. Now, again, I told you we were going to go higher. I was looking for the volatility oscillator to turn back down off the signal line. It did. The trend direction to turn back up. And again, in order for the S&P to sell off, we've got to see volatility sharply rise and get back above that signal line like we did over here. When we had the 2022 peak, we got above the signal line here, volatility sharply rose, and we saw the S&P trend direction go negative and remained that way the duration of the sell-off during 2022. So right now it's doing the same thing, the S&P trend direction, that it did back right before we topped in 2022, and that is forming this divergence. Could we go and get a January rally? The upper channel line that I've been talking about on the S&P 500 would now take it towards 62 or 63, into the 62 or into the 6,300 range, and still reach the target, which I told you I think is going to be the likely outcome, and still see this push back up and again still get another reference point of a divergence. The sell-off from December, with the S&P dropping nearly 4.5%, is not being confirmed, with volatility sharply rising and the trend direction going into the negative region. The December sell-off so far is not being confirmed as a top. Let me repeat, the S&P sell-off from the December high is not being confirmed as a top. I still believe we're going to make new all-time highs. I still believe to hit that upper channel line in the weekly time frame, which very well could take the S&P into the 62 or 6,300 area. A number is not the target. The trend line is a target. For the last 8 weeks, we have not reached it. Came close over the last 8 weeks, but we did not reach it. We still may reach it. I think we will, or go a little bit lower and attempt to recovery. And again, that could take us into the 62 or 6,300 trading range. Again, a number is not the target. The trend line is a target. We have failed to reach it. I still think that we will. When the S&P peaks, this will likely confirm it. My guess is we have not seen a peak yet, seen the top yet, but I do think it will happen. I keep saying I think we'll move to new all-time highs and eventually reach that upper channel line in the weekly time frame. Reach the monthly trend line. We're going to overthrow it just like what we did with the Dow. Please support the channel with the link directly below. That allows me to be able to provide you this information. Like the charts, you like the indicators, let me know that by supporting the channel today. If you could take a moment to do that, I would really, really be grateful. Most YouTube channels make their money through sponsors. They contact me, I turn those offers down because I don't want to sell you a bunch of stuff. I just ask that you partner with me and support the channel. If you follow the link below to take you to a secured site, and you can do that any amount or make it a recurring donation. If you do that, I thank you. But if you could take a moment to step up to the plate and help out, I would really, really appreciate it. I thank you for your consideration for that. Now, because of the divergences that we have in the weekly time frame, I told you there's a really good shot that we see a peak in either December or January. And again, the trend lines that I was looking for, well, one of them has been reached, and that was the monthly trend line that we've talked about. I showed that trend line in my last update. You might want to watch my last update if you didn't watch it yet. I show a very interesting sequence count, longer term, that could be setting up here in January for a potential reversal. Now, it's possible we have it in December and it's close but no cigar that we reach the trend line in the weekly time frame. But again, as I've said, I still think even though we have turned down off of the count here in the daily time frame, I still think we're likely going to reach that trend line in the here in the daily time frame. We turned off of it. I still think we're going to reach the trend line in the weekly time frame. So far, we've seen the S&P 500 peak in early December. The Dow peaked December 4th. The S&P peaked a few days later. It goes December 6th. We formed the triangle. The triangle had a downward resolution. We turned down off of the trend line here from the July peak right here. And again, I talked about this 13-9 double sequence count reversal signal that could give us a pullback or a reversal, one or the other. Far, it has given us a pullback, breaking the trend line, now back testing it, back to gap support right here, this horizontal support from the presidential election results rally that we've had. We had a back test of that immediately, of that area, not filling the gap, and then we've done it again now, breaching it ever so slightly. The gap fill for the presidential election results right here is at 57.83. So if we have a successful back test, I'll be watching that. We have the horizontal support from the July peak over here at 57 or 56.70. So we'll be watching that area as well. And we're back testing it. The problem with the break of the trend line is you need a confirmation and a follow through. And we got a confirmation, which wasn't very convincing. It was just by a point or two. Which was this bar right here, and then we rallied back up. So we'll need to see a fall through. And even if we get the follow through, we still may find support in this area, the gap fill at 57.83 or horizontal support at 56.70. So we'll be watching. So there is still a possibility of a top in December if we stop making new highs and again aren't able to flip the daily signals back to bullish and remain that way. Signals try to turn back to bullish, but turning down. We'll be watching to see if momentum can flip back to bullish and remain that way, and if we can clear this trend line. You got to be able to get back above it. And again, very, very similar to what Bitcoin is doing. Go watch that video. It's very interesting. We had the 13.9. We went just a little bit higher, and so far that's turned out. Again, this 13.9 could just be a pullback. It could lead to a bigger reversal. My guess is it's a pullback, and we're probably going to still go to new highs, but you can see the possibility that, again, it's possible we are breaking down from a rising wedge and back testing, and we end up getting a bigger sell-off. I still think we'll likely see a bigger rally in January. I think you could see a freak out over inflation into January. That could be the catalyst for a peak. Market starts selling off, and then the Fed begins to panic. If inflation is a concern, then there could be a worry that we, don't get any cuts in 2025, and that's what the herd loves. Believe that the cuts are bullish, not going to get them, then the market could have an inflation sell-off. Like in 2007, when the Fed panicked and cut rates, an emergency cut, and then did another jumbo cut at the January meeting there in 2007. Markets initially celebrated it, but it led to bigger sell-off after the bounce. That's what I think is going to happen. I think we'll see a 20% drop once we peak. Fed will panic, and I think that the peak could possibly be, the catalyst could possibly be concerns about inflation and fewer cuts, or maybe no cuts. And some people on social media are saying no cuts. Narrative is that, warned about what's going to, before it happened, I told you we were going to see the market likely throw a temper tantrum, fewer cuts. That's now happening, and it's probably not over. Well, it could be the catalyst for the stock market peak, but I do think we're going to go higher in all likelihood in January. I think we will see inflation reports begin to reflect uptick in inflation, but I also think we'll start seeing evidence of an economic slowdown, and eventually the Fed is going to panic, and that panic is probably going to come in the first or second quarter. I think the recession will show up in the first or second quarter. And again, if we see a Fed pause, that'll be a huge monetary policy mistake on their part. Be slashing rates right now, not worried about inflation, but worried about the recession. The same mistake they made in 2007. So far, the 13.9 here has played out, Is it a pullback or is it the start of a reversal? You do have a possible head and shoulders pattern here, as well as I've talked about with the left shoulder here, the head formation, and possibly a right shoulder here. Bitcoin's forming the same type of pattern. Go watch the Bitcoin video. It's pretty interesting. Now the S&P 500 got that bullish divergence, and since the bullish divergence occurred, we back tested the trend line on the daily chart, went back to back test the lower boundary here of the triangle. The triangle had a downward resolution. Triangle allowed S&P to recover most of the decline from the Fed, but now turning back down off that gapping lower there on Friday. So again, I'm watching, does this level hold, or do we go back and try to fill the gap down here at 57.83, which again was that presidential election results gap that we had, and then the horizontal support below that at 56.70. Now the gap fill or horizontal support beyond the gap fill would be a significant drop for the S&P. Currently we're at 59.70. This would take us down to 57.83, which would be, again, 200 points lower from where we're at right now. And then if we hit 56.70, that would be exactly 300 points from where we are right now at 59.70. So it would be a much bigger drop if we did see that happen. We'll be watching to see what happens. Do we end up getting a larger divergence down here at the gap fill or horizontal support? Or again, are we just pulling back to the cloud here and going to try to get a recovery with a higher low here or a little bit lower, but not taking out this low? We'll be watching on the 60-minute chart. Again, the risk is we're back testing the triangle here. We're back testing the trend line on the daily chart. That gives us a bigger pullback. If we do get a bigger pullback, I still think that that upper channel line in the weekly time frame is still likely to be reached, but I'm open-minded to a reversal. We just have to see more evidence of that if that is going to be the case. I am looking for, so again, if we try to still reach this area, you're looking at the 6,200, 6,300 area. Go as high as on into the 6,300 range. Again, the trend line is a target, not a number. So anyways, we're back testing this trend line here on the 60-minute chart with our triangle. We're also back testing, as we've talked about, the trend line here in the daily time frame. I've talked about this already, but again, we're stalling at that 20 period. Same thing Bitcoin's doing. Very interesting. Bitcoin's finding support testing the 50. So is the S&P. It's stalling at the 20. They both have broken trend lines. Go watch the video. It's very fascinating. Now, if we go lower to fill the gap, we have the 100 period moving average and possibly a parallel channel. Again, the rising wedge could be evolving into a channel if we go down here to 57.83 or just beyond it to fill the gap there. And I've drawn that in right here, a parallel boundary here to this upper trend line right here that I've drawn. And if we go lower than that, then we could draw a parallel trend line from the July peak there, the red trend line you see right here, which we did turn off of with a 13.9 signal that I talked about in early December. So if we can recover here, if we're just pulling back, getting a higher low, and we can clear the trend line, could see a divergence still develop here, maybe a little bit lower, and then turn back up. Or if we come down to the 57.83 area or horizontal support here, really the July peak back over here, that would be 56.70. Then we could see momentum reach extremes at lower levels before bottoming out. But some levels I'm really paying very close attention to. If the gap support area, if this gap support area ends up breaking. So we'll be watching. And again, the possibility of a small head and shoulders, as I mentioned, still in play, which again, Bitcoin is setting up the same exact pattern. It's pretty fascinating. And that video is linked at the end of this video. On the RSI at that peak in early December, but it could evolve into a larger divergence or we can form a brand new one. We'll be watching. Do we see the RSI move down to extremes and come down into this area, dropping a couple hundred points, 200 or 300 points to come back and fill our gap there at 57.83, or test horizontal support there at 56.70, or do we attempt to try to get back above this level and move to these trend lines, the red one or the black one again? We can recover immediately. Again, we can move towards that trend line there in the weekly time frame that I've been talking about. The MACD is still below the signal line, but it's not yet negative. And again, it has been positive. And I've talked about this with the price oscillator and the MACD. The MACD looks at the moving averages. Price oscillator looks at price. But again, here we got back above the 20 and then the 50 period moving average, pulled back towards 50, moved just beyond it. Price oscillator stayed in positive territory even though it turned down. And again, we bounced off of it here just before the election at horizontal support. That 50 period is a green line right there. And here we moved just beyond it and bounced off of it just like we did back over here. We're still in positive territories. Can the MACD recover here, or does it go negative? If it goes negative, we'll get a bigger sell-off. And again, possibly 200 or 300 points before we hit key support areas in our gap fill. And we had a significant sell-off with the Fed. We recovered. We'll see if we want to test this low or take it out. We'll be watching. And as we trade on very, very light trading volume. Pretty fascinating there with the MACD. Now, we've had momentum here with the momentum line turn back to bullish. The blue line right there, the blue arrow, showing momentum has flipped back to bullish here after the Fed sell-off and the downward resolution to our triangle. If it's just a counter trend, momentum will flip back to bearish here. We still have momentum bearish with the bearish reversal of conditions. So we have a discrepancy between the two. This revert back to bearish here, the momentum line, and turn back down, and we start getting a bigger drop and end up forming a divergence, or confirmation of a higher low. Or do we get a bullish reversal of conditions, and we see that flip back to bullish, and again move back into agreement. Here we have momentum bullish, but it's not being confirmed yet, not going into positive territory with the oscillator, momentum oscillator here. We had those warning signs as a divergence formed and as a triangle set up. It could just be a pullback, and the triangle could still have an upward or downward resolution. Ended up having a downward resolution. So as what I'll be watching for as we go into, again, the holiday, second week of the holiday trading with the New Year's Day. You're going to have the New Year's Day, we're going to be closed. The market's going to be closed. We'll have an abbreviated session on New Year's Eve. Lighter trading volume. Institutions, the big guns, they are taking extended vacations. So if we do float up, it will be on lighter volume by the retail investors. So we'll be watching to see how this unfolds. Some bearish things going on here as far as the trend. Ribbon in the background. But we did break back above the cloud and got a bullish signal here. The cloud is bullish in the daily time frame. And again, momentum has flipped back to bullish. Got to see more signals turn back to bullish if that's going to be the case. So kind of a mixed bag with this sell-off. Keep in mind, again, here the momentum line has turned back to bullish. Short-term momentum is bullish here. We're getting a little bit of a pullback, but it's still bullish at this point. Just revert back to bearish, or will we see that bullish reversal of conditions next week? Well, the momentum line is bullish with the attempted rebound off of the Fed sell-off there. We haven't seen it flip back to a bullish cloud here, and we're stalling at that 20-period moving average. So again, the risk is that the MACD goes negative and we get a bigger sell-off. Oscillator already is. The risk is oscillator starts turning back down, remaining in negative territory, but start turning down and getting a bigger sell-off and taking us to fill the gap a couple hundred points lower, or to gap support about 300 points, or I'm sorry, to horizontal support about 300 points lower. Here it is up close. We got some green bars going on. You got to get back into positive territory if you're going to resume and flip the cloud here back to bullish for momentum. Even though we've turned back up and recovered, we haven't flipped the cloud back to bullish. The 10 is still below the 20 period. Got to flip this back to bullish for momentum to turn back to bullish and be able to get the oscillator back into positive territory. The MACD firming up in positive territory here. Risk is we get a bigger dump and try to take out this low and see the MACD go negative and the oscillator remain negative. So we've got to flip the momentum here. And we have a mixed signal with momentum. The momentum line is back to bullish with the rally. It hasn't been able to flip the the momentum cloud here back to bullish. If that happens next week, again, lighter volume, the market can be easily manipulated up or down. We've had a sell-off in December. See if we can recover in January or not. Got the red bars. We've got the divergences. The MACD in the weekly time frame has rolled over. Again, it's possible it's done, but it very well could be. We get another reference point and still try to reach that upper channel line I've talked about in the weekly time frame, with bars either turning back to green, or even you can even see red bars and still try to climb to a new high or get a counter trend, which so far we have a counter trend back testing the broken trend line of the rising wedge on the daily chart. We've also taken out the 70 level here on the the 80 level here on the stochastic. Again, we need to see that recycle back up if the rally is going to continue. If it continues to drop, then the risk is we get a bigger dump. Down here, as during this advance a couple of times off the 2023 low, but turn back up. We'll see if we see something similar to that. We're right at that 10-week moving average. If you flip the cloud here to bearish in the weekly time frame, the risk is start a reversal rather than just get a pullback. S&P weekly here. Now, while we've had the red bars here on the S&P and on the Dow in the weekly time frame, we didn't get it with the NASDAQ yet. Watching next week, do we get a red bar again? Do we get a green bar? And if so, do we take out Q support, or do we try to recover and bounce maybe off this 10-week moving average, the red line you see right there? We're just above the 20, the blue line. Tech 100 did not get a red awesome oscillator bar. I'll be watching to see if it does. Again, these divergences in place on the awesome oscillator on the MACD. Stochastic's rolling over, and it's right there at the 80, just slightly above 80 right there. So again, going to be watching NASDAQ stop making new highs. NASDAQ recently made new highs. The rest of the market was selling off in December. We made new highs 2 weeks ago. Talked about, do we see NASDAQ sell off and the rest of the market recover? I'll be watching the weekly chart here into the holidays here, going into the New Year's Day holiday. We got a green bar for NASDAQ, but again, we still have a bearish reversal of conditions right here. That's got to change, okay, if we're going to go higher. But we did get a green bar. So again, can we get a bigger recovery trying to bounce off the 20-period moving average? The 10 is still above the 20-period here in the daily time frame. We've seen other pullbacks turn things to red, but then the NASDAQ recovered. We see that here, bouncing off that 50-period moving average just above it. The MACD has no divergence. Neither does the awesome oscillator. Do we still get one? This gives we get a bigger sell-off. If momentum here remains negative, you still have red bars and a red cloud. If we go to move to take out the 50-period moving average, and this low over here, then again, the door is open for a bigger sell-off for NASDAQ. We saw momentum turn down and again form a little tiny divergence here on the daily chart. We formed a little divergence, so that's given us a sell-off. Again, the Fed sell-off there, and then we rebounded back up. We actually could be expanding the rising wedge. Again, we had an overthrow of the rising wedge right here, and then we came back. We broke the trend line, but again, no confirmation and follow through, just like the S&P. It got a very unconvincing confirmation. Here we got no confirmation when we broke the trend line, and we turned right back up and got above the broken trend line. So again, I've drawn boundaries here. This dotted line here, could this trend line, this pattern be expanding into a larger one with our bounce off the 50 period, just above the 50 period, I've redrawn a trend line here. So again, still potential rising wedge, but if we do break down further, I'll be watching that 50 period moving average. I'll be looking to see momentum flip back to bullish next week, or do we get a bigger dump? If we do, I'll be watching the 100 period moving average. We do have the gap down here, the gap fill on a closing basis right here near that 100 period moving average. Didn't quite reach it right here, still could, and again, below that is our 200 period moving average. The Fed sell-off, we saw about a 5.5% drop. We broke this trend line here on the 60-minute chart. These negative divergences played out, gave us a sell-off, and we came right back here to this gap fill area. If we come back down and we end up taking out the 200 and this low, the 400 period moving average, then again, this gap fill comes into play at 20,227. With the presidential election results rally, we never did come back and quite fill that gap. We still may do it if we end up getting a bigger sell-off. So I'll be watching the low here. I'll be watching 50 on the daily. Do we hold above it? The 200 here. We're pulling back and testing it with our gap down there on Friday. Again, the divergence gave us a big, powerful rally back up and recover a lot of the losses there from the Fed sell-off. They reduced their estimate for the amount of rate cuts we'll get in 2025. So we'll be watching. We can recover sooner rather than later here. We could try to rally into that CPI on January 15th. 2.5 weeks from now, but remember, we're going to have an abbreviated session. Even the market will be closed on New Year's, so not too many days away. We'll be watching to see if we can recover. Again, the RSI tried to bounce off the 50 area here. We broke the trend line, got back above it. There was no confirmation of follow through. So again, RSI is above 50. If it starts losing that level, then we can lose the 50 period here. Horizontal support is just below that from the July peak. And the gap fill, as I mentioned, at 20,227. The rising wedge could be expanding into a larger pattern, as I showed you on that other chart. The MACD, again, moved to a new high, still could form a divergence. It is still in positive territory. I'm still watching these trend lines in the weekly time frame. This is with the log scaling, and we haven't reached this one. We still may. Here with our log scaling, and we do have these divergences on the RSI and the MACD. So linear scaling on the NASDAQ. We fell just short of that upper trend line, still may try to reach it, or again go towards that log scaling trend line I talked about. This one excludes the lows over here, just connecting this low and this low. We still may try to reach that trend line, and here it is if we zoom out. Also, we did turn off at this trend line from the pandemic low right here to our high there in July. We did turn off of that area. Still may try to go reach it and test again or even overthrow it, but just some trend lines I've been paying attention to on the NASDAQ. We did bounce off of this blue trend line right here at the lows from the July sell-off down to the August low. So again, just some areas to pay attention to. If NVIDIA bounces off this trend line right here and tries to go up and make a higher high into this red trend line right here, we can hit that major longer-term trend line I've talked about on NVIDIA. If we break this level decisively and take out our 20-week moving average, right now we're trying to bounce off of it. If we break this level decisively, this channel here, I think it will terminate the bull market for NVIDIA. I think it will terminate the bull market for the AI stocks and for the stock market.